Hello everybody, welcome back. Let's have a look at the main ones, the Bitcoin, Ethereum and XRP, and try and work out if there's anything that we can really try and work out what's going on. Now clearly we had a drop, but in my opinion what's happening now is that Bitcoin's trying to find a range. Don't think this dip is likely to get bought and pushed right back up to the top, although that is a possibility, but I think it's the less likely possibility. I think the most likely situation is that we're going to get brought back down, not today, maybe not tomorrow, but over time. Now, any of these moves can play out at any point, okay? There is enormous amounts of open interest still in this, in both long and short positions. The longs have started to move up ever so slightly, but the shorts are still higher now than they were just 3 or 4 days ago. A lot higher actually, but the longs have started to increase. So there are people trying to buy this back, people trying to go long on that, and fair play to you. There has been some opportunities here to go long and to buy back. And in all fairness, it depended on your time frame, wherever you want this to head, how long you want to hold on to it and whatever. Buying back here is fine. Even buying at the top is okay if you're prepared to hold on to it for a long time. Now there is a chance that that we can reach our all-time high this year. There is always that chance. I mean, all fairness, we have pulled back. At the price action at the moment is 13%. Is the pullback from the top as to where we are at right now. That's not that in the grand scheme of things. That's not much when you consider that over the last. We'll measure it from this last big dump. From the last big dump, we rallied almost 100%. So in all fairness, that is. It's not nice to have that, especially for the people who've been buying out all these areas or trying to go long. Can you imagine that? The people that did that, trying to go long at the top, waiting for the moon. It wouldn't be good for them. But in all fairness, I think that there is more down pressure to go. So when I say that the Bitcoin's trying to find a range, what I mean by that is that we're not likely to go massively up, nor are we not likely to go massively down in this short space of time. What's more likely to happen is basically what is already taking place. We're finding a range, and the range is getting smaller and smaller and smaller. This is it on the hourly chart, so we don't normally look at this sort of thing on this channel, but we do have to kind of consider the smaller term time frames to give us the edge to work out if we're going to go up or if we're going to go down. We want to trade the big moves. We're not too fussed about trading these little ones. That's the sort of thing you do if you're bored doing leverage. Only for people who know what they're doing or are willing to lose money, I suppose. But really, generally, I like to trade the long-term time frames, and that's where I get my targets from. That's where I get my buy orders set from, and that's where most people should really kind of, I suppose, look at this. They should look at the long-term play. So the long-term play has been played. The big parabolic move was played. That was great. Same with XRP. That was a great play. And now what we're looking to do is to readjust our next long-term play. So my best guess is that we will come back down over time, maybe weeks to maybe even the rest of the year. Sideways and down action is my preferred scenario right now. But that doesn't mean that I'm likely to be playing much of those moves. If there's an obvious setup, then I'll probably short it. If there's an obvious setup, then I'll probably buy it. So if we're playing this range out at the moment on the hourly, what you can see is we had our dump. We had a significant buyback there with a high point here. We had another dump which was even lower, but a significant buyback and a bounce all the way up to 17,500, which is kind of what we said yesterday, that's the likely top target for this bounce. So don't get too excited and think that this is going to have massive continuation. 17,500 was roughly where I thought it was going to go to, and it's kind of just got a front runner ever so slightly by $50. I should mention, however, I wasn't playing any of these ranges last night. I'd like to have done, but I just didn't have the time, which is why I'm doing a lot of my trading bot business. I thought I'd bring this to your attention. So my trading bot, despite the ups and downs of this trend, is actually still in profit. I've had this going for almost a week now. Yeah, basically a week, and still making money on it, to be honest. So I left this one on as an experiment. So those on my Telegram channel, they like to hear about this bot, and I would actually like some suggestions for a name to give this bot now, because I've become very personally attached to it. It's almost like it's almost like a living entity now, and so I'd like to give it a name. So put some comments down below of names that you'd like me to call my bot, and I will christen this bot whatever I think is the best name in the suggestions. Anyway, the reason I bring this back to your attention again, I'm sure you're sick of hearing about my bots, is that actually there's a Black Friday sale on this, which is a bit of a jip because I've paid the full amount, but you can get 30% off on monthly and also yearly plans. So if you are experimenting with the bots and you do like the way that they work, I suppose now would be the time to get in. Anyway, we're back on Bitcoin. So Bitcoin hourly looks like it wants to play this range within the hourly chart time frame, and maybe even come up to as high as 17,500 or thereabouts, maybe a little higher ever so slightly, but again probably test that range. Now this would be a pivot point if this were to break to the up. I think it's unlikely that it did, but if it did break to the up, then it would cause a relatively large move. But are we going to go back up to the all-time highs after that? Probably not. I think what will happen is that we'll move up, and then we will just collapse back down again, back into essentially this range. Maybe not breaking these lows yet, but if we were to break the lows, and I suppose it's appropriate now at this point to start putting in some blue box areas out of resistance and support. So this is clearly the zone to be considering for support now. So it is essentially 16,500, which again was one of our targets, when we sold the top, that this is an area of significance. 16,500 is an area of significance. Breaking down below and closing below, not that wick area, but 16,200 would have and will spark more continuation down. And the areas to the down in this instance, I swear I had some more blue boxes down here. They're just not showing up on the hourly chart. Is this blue area here, which is about between 15,800 to about 15,000 flat. So that would be the next area, and this again would be where the next range would start to play out. So it would play out between this range, maybe even finding a resistance at 16,200 to 16,500. So again, we'll find our ranges, and at the moment we're finding a range ever so slightly on the hourly chart between 17,500 and basically 16,200. So this is currently the range to play in. Good scalping range, I suppose. If you've got the time to scalp this, then this would be the range to scalp in. Buybacks appear to be taking place here. If you find nice wicks bouncing up from these areas, then it should have continuation, but it is relatively slow, but the moves are quite nice if you think about it on Bitcoin. So that is a 7% move, and then likely to find an equivalent move back down again. So a scalping range is what we're playing in now, which is nice, and actually that's the sort of thing that bots like. But I wouldn't suggest setting a bot up on this right now, because it means you'd have to buy Bitcoin, and if you had to buy Bitcoin at this level, there is always that chance that it does break down and go back down. Well, what would this be if we were to go down to 15,000? It would be a significant percentage wise, it would be quite a lot. Yeah, that would be a further 11%. So this is definitely my preferred scenario. It doesn't mean it's going to play out immediately. I don't think it's going to happen today, for instance. We're making the most, and everybody, I suppose, is making the most of this range. The bulls and the bears are both having fun at the moment, buying and selling, and everybody kind of is happy in a sideways range like this. Now, one scenario that could occur within a range like this, I don't think this range is the one that's going to do it, but when we do find another range, maybe a higher one or a lower one, and we stay in that for a period of days, for instance, without any massive upsets to the up or to the down, so the bulls and the bears are happy with their lot, they're both feeding appropriately on their profits, that will allow the Bitcoin dominance to perhaps maybe subside and allow the alts some decent relief rallies, maybe even an alt season. But it's not going to happen immediately. Everything's really closely pegged to Bitcoin. So what we'll look at is we'll look at Ethereum on the hourly chart to see, I imagine, a similar range basically forming, because it's essentially the same thing. So yeah, drop down, this is our buyback zone, and it was a double bottom, but that's nothing to get excited about at the moment. So we're talking 481 buyback zone, and the top being about 530. So a nice range to be playing in, scalping wise. Bulls and bears all very happy with their lot on the hourly, but we do have this cross, we do have this Ichimoku cloud. So again, with Ethereum, I do believe the move is to the down, but that won't be without some significant moves up and down. So even if we were to come up here, we could reach that level again. That'd be a 3% move from where we are, and probably get rejected from this green 50 exponential. So we're looking for some more moves up and down. So it's a trading range, and again, it's finding its own range. XRP, obviously more volatile at the moment, which is something that no one would have ever have imagined. Whether a month ago, they say that XRP volatile, you've got to be joking, right? How the tables turn. Well, it certainly is volatile at the moment. It looks exactly the same as the other charts, obviously, because they're, like I say, they're all following the same situation. Apart from, because it went up so dramatically, we don't have any kind of negative cross on the 1 hourly. This is different, but what we're having not only a Bollinger Band squeeze, which is what we're getting on both of these, so basically limiting our trading range, but we're also getting a squeeze take place on these exponential moving averages, where essentially we're being rejected from closing beneath each time. Closing above this one would be bullish, definitely, but it doesn't look like it's going to do that. So this is the range on the hourly chart, and the range is going to be a lot more significant. So even from where we are at right now to the top of that, that's a 7% move. So more than Ethereum, more than Bitcoin, because it's a more volatile range. So playing this with leverage, you wouldn't want much leverage. You wouldn't need much leverage. When something's volatile, that's the definition of using leverage. You use leverage in high amounts when something's not volatile. When something's volatile, you use less. Anyway. So again, my expectations are that as this squeeze takes place, and these start to converge into each other, the trading range will get lesser and lesser and lesser until it breaks one way or another. But the odds are against it. I mean, on the hourly chart, that's not looking too bearish, nor is it in a bullish situation. It's definitely converging into itself. But RSI has what we can see here, slight moves up but slight moves down. It's difficult to call. The best thing to do is to use Bitcoin as your indicator at the moment. When everything's pegged to each other, you can try and trade your altcoins if you like. For me personally, I'm sitting back and leaving it. The big trades have been done now, and I'm not really planning on trading these ranges unless I have a couple of hours to spare, which is very rare these days. I would play these ranges with a bit of leverage, because they're reasonably predictable in their moves. But other than that, I'm just going to wait for this one to play out, whether it breaking up or breaking down. But I have to say that I do much prefer the concept of a breakdown at this level, but it doesn't mean it's going to happen immediately. We are still finding our trading range. So when we look at this on the 4 hourly chart to give us a bit more of an idea of what's going on, we were severely oversold here, so that's accounts for that buyback. We're not oversold anymore, which means that we can easily drop back down again. Dropping back down, maybe 16,000 flat would be an area maybe to buy back at. But again, a significant drop is going to take that one out, and it will be into these blue box zones. All of these areas here, the money flow index and the RSI, technically, they could still go up. They could still go up more. But this is only a 4 hourly chart. It's not the greatest thing to look at. And mainly, I'd like to look at this, which is the daily chart. And the money flow index is still very high. We've got a negative cross, very high up though, I should say, way, way, way high up. But we do have a negative cross, and it's quite steep as well, to be honest. On the MACD, the RSI is very low. It is very low, but that will reset over time, which is what I mean is it's all part of this at the moment, finding a range. There's a range at the moment. The bulls and the bears will be taking bits here and bits there, and a perfect scalping range really, for those who are willing to do it, but not looking for any form of massive continuation up, nor am I looking for a big move down. I'm waiting for this range for people to get bored of the range, and then for essentially one of the two, whether the bulls or the bears, get the upper hand. But as you can see, the concept of buying the dips at this point is old news. Buying the dips was previously a very appropriate and adequate trading strategy. and dips get bought until they don't get bought anymore. If we're closing beneath this 10 exponential moving average, every close that we have beneath there is bearish, and as you can see, it's now facing down. It's not very steep, but it's steep enough, and it'll get steeper. This essentially is going to play out as resistance over time. Now this isn't how to obviously anticipate how it's going to look, because if we had a bigger drop, then it would get steeper. If we moved up and broke above it, then essentially closing above that could be bullish again. But the idea is there. The concept of that being a resistance zone is an appropriate thing to look at on the daily chart. So a 10 exponential moving average is now, at this point, is now going to be an area to short from. As before, it was an area to go long from. Buying the dips on the 10 exponential was an appropriate strategy, all the way up to the top. And now that we're beneath it, shorting the 10 exponential is also at this point now an appropriate trading strategy, as we're beneath it and it should be resistance. We've not even come up to test it yet, but if we were to come up to test it, I would expect to see rejections. Over the next few days, this is going to be lower than our previous most recent high of 17,500, and at that point it will start to drive the price down until we break above it. And only when we break above it and close above it, and then even more than that, closing above it and then coming down to test it as support, then we're back bullish mode and we can talk about all-time highs again. But at the moment we're below it, which means that, in my opinion, the price is going to be driven down slowly on a daily time frame, like I say. So if we were to look at this, so today the high point would be, it's not likely to get any higher than 17,800. Tomorrow it would be a little bit less, going down basically about $100 a day as far as that resistance at this current time with this kind of trajectory. But nothing, like I say, nothing overly exciting either way. It's a nice trading range, and this is our current trading range. The trading range will change over the next few weeks, definitely, probably into a lower trading range, and maybe after that even into a lower trading range than that. But I would be surprised if we didn't have some significant buybacks down at these lower levels, and the trading range and the scalping range could be really large, 10% up and down, and which means that alts will really go crazy at that point, up and down. But everything is pegged to Bitcoin right now, so basically means that Bitcoin is your main indicator for the health of any altcoin at the moment. The absolute low target, just to let you know, and you've probably heard it from me before, my absolute low target would be this level here, this red line here, which is from the price that we are at right now all the way down from the top to the bottom. From where we are at the price action at the moment is a 24% move down. That sounds ridiculous, and people will hate me for that, but it's not crazy. And again, I repeat myself a lot, but there will be the occasional person that's not watched this channel, so for their benefit, I'll just show you what this trend line has done in the past. So this is back 2017 September, when we were stuck beneath it. That was about a 40% drop. It doesn't look like it, but it was. These are 10% moves, coming down to test it, coming down to test it, launching from it, coming down to test it, and this is about a 30% move, which again, in a bull market, a 30% move to the down is not a big deal, and that's why I think that it can happen, and it could happen. If we start to break down further incrementally, that would be my last step. And again, we are in a bull market. It is confirmed. We definitely are in a bull market. So as you can see, on this occasion, we broke above it, came down to test it, broke above it, and then we didn't even test it again. We've just been riding the 10 exponential moving average, or even the 7 simple moving average on some occasions. So now that we're breaking down, essentially, I would be looking to maybe even test that again. And then that would be the ultimate buy signal for Bitcoin, the ultimate long signal for Bitcoin. And if it were to break, that's fine. That's what stop losses are for. If it were to break, your stop loss would kick in, and what I would be doing then is I would actually be becoming what's known as a perma bear, and I would actually be very bearish on this market and call this, and maybe consider this perhaps maybe the greatest fake out of all time, as this cycle would essentially fail. But I think that's highly unlikely. I don't think that's going to happen, but it's worth considering. But that's a very unlikely situation. This level here would be the best entry for a long-term position at this current stage in the market cycle. So we're talking about 13,000 basically. That would be maybe your last chance to get in before the really big moves are played out. And again, this is a signal not just for Bitcoin, but for the majority of altcoins too. They'll all be coming down with Bitcoin until Bitcoin decides that it's bottomed out, and they will all rally with Bitcoin initially. They will all bounce with Bitcoin initially because it's all pegged. So if we break down all the way down to here, 20% here, that you can only imagine what that would do to some of these altcoins. A 200% move for Bitcoin would be amplified, whether that be twice or 3 or 4 times by whatever asset it is that you're trying to trade on these altcoins. Essentially, they just amplify and exaggerate the moves that Bitcoin does anyway at this point while they're pegged anyway. They're definitely pegged right now, so they'll be pegged on the way down, and they'll be pegged with the bounce, and then only at that point, when things start to level out again, will things start to take on their own lives, and their own moves. But for the moment, they're very closely knit, all intertwined. The moves are all relevant from Bitcoin's perspective, so that's how I would trade this, and this would be a great place to be buying anything from if you ever get down to that level. Now, obviously, it's an upwards facing trend line. It changes ever so slightly on a daily basis, but because it's such a long-term time frame, the moves on a daily would be probably only about $25 or so, as it is steep, but it's been going on for so long. It's not horizontal, but it is facing up, but it's not a steep slope. But over time it is going up. So if we were to look at this time in end of January, it would be 13,400. But if it were to break all the way down from that where we are at today, it's essentially 13,000 flat. So it's more or less horizontal in the grand scheme of things, but it is upwards facing, and it is a very important trend line to consider buying from. And again, like I say, stop losses are a must. And I'm not saying that this is the area where it's going to come down to. This is a worst case scenario, but it would be the best place to buy it from if it ever did happen. It's the most obvious and the most reliable, and it's such a strong trend line. You can see a huge rejection here, and we rallied when we came up above it, but there was some significant dumps to it like that, and test there, all the way up. Even when we broke down from the parabolic top, we came down to test it, and then massive move up all the way down to test it, and then when we finally broke down from it, essentially it became a bear market, and then rejected, and then we had a parabolic run last year. And then we came down to test it as support, breaking down beneath it, super bearish, coming up to test it, can't handle it, and then basically the last time we tested it and we rejected from it was a few months ago, and again, I was shorting that area because it's a very, very reliable support and resistance zone. So anyway, I'm not saying that we will come there, but if we did, it would be epic, and I would be loving it because it's so reliable that's where I'll be buying back everything in mass and going long on as many things as I can afford to go long on. Anyway, like I say, a bit of going to be a boring time. Not expecting the dumps to take place today, even though they could. Everything just looks like it wants to play out this range, and it'll get smaller and shorter, and then the Bollinger Bands will squeeze, and the range will get tighter and tighter and tighter, and someone is going to give one way or another as the range gets smaller. In fact, saying that, we might be able to have some kind of fix on this market at the moment if we were to put in some kind of wedge formation. Perhaps we could try that now, but it might not be something that we could really. It kind of works, but I don't really like it as such, but we'll keep it in there for now. This could be a trading range, and then a closure above here or a closure below there on an hourly should give us the little telltale signs, the bears of one or the bulls of one, and we can work out which way we're going. But that isn't that's not, I suppose, appropriate at the moment, but it looks okay. It could. This is the idea anyway. It's just a ballpark idea for you that this is what's likely to happen with this trading range. We've established a trading range. It's getting smaller and tighter each time, and then when it finally breaks one way or another, it will be the bigger move, and we'll go into the next trading range. And my expectation is that it will break to the down, but we'll see. We just don't know. We'll see. The all-time high has been set for this year. I don't think we'll be taking out a new all-time high this year. Anyway, thank you for watching. I hope you have a nice day. Take it easy. Subscribe to the channel. Join the Telegram. And enjoy yourself. Stay safe.